We're going to go through today and look at just a basic understanding, an overview of how your taxes are calculated. So, we're going to focus in on income tax. So, if we're looking at you're working, how does the government look at how much taxes you owe federally and state? So, a few terms we're going to look at here before we get into the math part of it. So, we're going to talk about gross salary. So, when you get hired somewhere, if it's a salary job, meaning you're not paid by hour, you are guaranteed a certain amount of money, regardless of how much hours you put in. Your gross salary is how much they're willing to pay you before any deductions come out. So when they hire you and they're like, congratulations, we want you to work for us and you're going to be making $70,000 a year, that's not your actual take home pay. That's how much they're going to pay you. But then taxes get taken out of that. If you have insurance, that gets taken out of it. Any other kind of deduction that comes out, that comes from your gross salary. When we calculate taxes, we always go back to your gross salary. We don't look at what the net salary is to do the calculations. Okay, net salary then is what your actual take home pay is. After all the things are taken out, what are you left with? Okay, that's what you're actually going to have to live off of. We're also going to use the term amount withheld today and moving forward. So when we're looking at taxing something, the amount that the government takes is called the amount withheld. Okay, so when we do the math, that amount we get after multiplying is the amount we're talking about. We're going to look at calculating three kinds of taxes. One is your income tax, both federally and at the state level here in Indiana. So this comes from anybody who works. If you have a job and you get paid with a check, you pay income tax. Now, some people try to avoid paying taxes on their wages by getting paid under the table, which means you get paid in cash. So if you're not reporting it, the government can't collect it. But if you get a check from an employer, usually taxes are taken out from that. Okay, so we're going to look at calculating that. And then we're also going to look at calculating FICA tax. So FICA covers Social Security and Medicare. So there are two tax rates that go into this. This is also known as payroll taxes because it comes out when money is paid by the business. So this is kind of a special tax because everybody that works contributes to Social Security and Medicare, even if you never get the benefits from those programs. Everybody contributes into them. Okay, and it's also special because it is a tax that you pay as the employee and your boss matches. So let's say it ends up being $100 per paycheck. You pay $100 into those funds. Your employer also contributes $100 into the funds. So they match the FICA amounts for every single employee that they have. Okay, which is why for small businesses, it's important to maintain a smaller workforce so they don't have as high a payroll tax. Okay, so we're going to go through this part and look at progressive taxes, how you calculate those, and then the second video we'll be looking at all the rest of it for today. So progressive taxes, just to review, is a tax in which the taxation rate increases as the value increases. So as you progressively make more money, you progressively pay more in taxes. So our federal income tax in the United States is a progressive tax. You will know that something is a progressive tax because it will have a tax bracket. So I'm trying to move this here. Oh man, go back. The tax bracket is looking at breaking down the income levels. So you'll see here there's a single filers, married, and a head of household. So we're going to focus in on the single filers category. So this would be anybody who files as a single individual. Now, you can be married and file single, but you both have to file single. If one of you files married, the other has to file married as well. You cannot be single and file married. You have to actually legally be married. Head of household refers to people who are not married. So they're single filers, but they have dependents. So this could be like a single parent. This could be an individual who's taking care of a parent or a disabled family member. So they have at least one person that's dependent on them that isn't working. They can file for as head of household. So you'll notice the numbers are different. These numbers represent income amounts. Okay, so how this works is that we have the government, instead of taxing the full amount at one rate, they take a little chunk, tax it, take another little chunk of money, tax it at a higher rate, and continue doing that until all the money has been taxed. So that's what this refers to here. So you'll notice as the income levels increase, the tax rate increases as well. So that would make this a progressive tax. That's how you know you have a progressive tax. All right, so when we look at calculating taxes, this is how we do it with a progressive tax. So I've just put the single filers information here to the left. So the first step is that you have to figure out how much income has to be taxed at every single level. Okay, so for example, at the first level, at the 10%, and this is our first level here, we need to take the money that's in the column here and figure out how much money needs tax. Now, the first one, it's pretty easy to calculate. Okay, it goes from 0 up to $9,950. So we subtract that, and this tells us how much money needs to be taxed at this rate. Okay, so step 2 is then to tax that amount. So we take the tax rate at that level, the 10%, and we multiply it by the amount we got after subtracting. Okay, so when we do that, we take $9,950 times 10%. We're left with $995 even. Okay, that $995 is the amount withheld. That is how much the government took from that first $9,950. Okay, and then you repeat those steps at every level until all the money has been taxed. Now, before you do the last step, let's say you get to this point right here and you say, okay, well, the person is making $95,000, which isn't the full 165, but it is more than the lower amount. So what you would do is take the salary, whichever level you stop at, you take the gross salary minus the lower number, and that amount times the tax rate. Okay. Once you've done all of that, you've taxed all the information, you add up all the withheld amounts, and then that is your total amount withheld for federal income tax. Okay, or whatever this progressive tax applies to. So we're going to do an example here with $47,628. Okay, so I have the bracket over here to the side. So again, at that first level, we need to know how much money is being taxed. So we take 9,950 minus 0, that gives us 9,950. We multiply that by the tax rate of 0.1, and that gives us $995. Okay, so that is the amount withheld. We then need to go to the next level. Okay, so the reason we're subtracting out, we're going to take 40,525 minus 9,950. You take the high number minus the low number at each level. The reason we have to subtract out this 9,951 is because we've already paid taxes on that amount. It's already been taxed. We're trying to figure out, up until this point, this 40,525, how much money has not been taxed. That is what this number right here, this 30,574 represents. Up until this point, this is how much money has not been taxed. And so their next step is to tax it. We take this amount times the 12%. Okay, whatever you get after subtracting is what you multiply by the tax rate. So this $3,668.88 is the amount withheld from this amount. Okay, so we go to the next level and we say, okay, does this person make more than this? The answer is no. 47,000 is less than 86,000. So we know we're going to stop here at the 22% level. So what we do is take the gross salary, that 47,628, subtract out what we have already taxed, 40,526, and that is telling us that there is $7,102 that has not yet been taxed. So our next step then is to tax that amount. So we take that amount, we multiply it by the 22%, and that gives us $1,562.44. Okay, so these three numbers here, what we get after multiplying, those are our amount withheld. So what we need to do is add them together And if we add those three numbers, we end up with this $6,226.32. That is the total amount this person owes to the federal government for the year. Okay, so on your paychecks, that amount gets taken out before you get paid. And so when you file your taxes, that's what we're trying to do. We say, okay, this is how much you were supposed to pay. And then the IRS will look at it and say, this is how much you actually paid. And then the difference, if you paid more than you were supposed to, you get a refund check. If you paid less than you were supposed to, you have to write a check to the government. Okay, so that is how a progressive tax is calculated. What I want you to do is go ahead and pause the video. I want you to try this on your own with an $80,000 salary. So go through those steps, do it out, write it out, type it out, however you want to do it, and then come back to the video, press play, and we'll check your answers. All right, so as you were doing this, you should have started at that 10% level. So again, we take the numbers that are there, 9,950 minus 0. That total we multiply by the tax rate. So times 10%, and that gives us $995. Okay, we then go to the next level, the 12%. We take that number on the income, the 40,528, subtract what we have already paid taxes on. So that leaves us with $30,574 that needs to be taxed. So we multiply that, and $3,668.88 is what you should be left with. So our full $80,000 has not yet been taxed. We go to the next level, and since it stops at the 22%, this is where we take the gross salary. You take $80,000 minus the amount in taxes you have already paid, and then that amount gets multiplied by the tax rate. So you should, at this level, get $8,684.28. You then need to add up those three numbers you got after multiplying. So you should have ended up with a total of $13,348.16. That is what this individual would have owed to the federal government for a gross salary of this amount. Okay, go ahead and go to the next video. We're going to talk about how to calculate proportional taxes and then add up everything to figure out what a person's net salary is.